Welcome back. You're tuned into Bazaar Morning Call and hope you're having a rocking morning. Well, to help us out with some fundamental analysis, we have Amnish Aggarwal, Director Institutional Research at PL Capital, who joins us on the show. Hi, Amnish. Good morning and thanks a lot for joining in. Well, let's talk about ZE. You know, that stock has seen a big recovery. Promoters chipped in at around 100, I think close to around 120 rupees odd. Now they're going the whole hog. They're saying they're going to be infusing money into the company and raise their share from around 4% to around 18%. So this will be viewed positively. What's your view on the stock though? Because there are a couple of unanswered questions. Utilization of this sort of money, will they ultimately go ahead and convert the shares? And also it's as just sitting on cash. So they must be having a big plan. Your view on the stock at around 137 rupees.
Hi Nigel. We need to look at what transpired in the ZE over the past few years because the promoters lost money in some of their infra projects and all, and after that there was a sell-off of the pledged stock, and now the promoter holding is very low. So definitely this seems to be an intent by the promoters to infuse money out in the company and increase their stake from the current around 4% to something like 17%. Now the company is sitting on cash. Now whether they will be doing some acquisition you can say in some related space is something to be watched out for, because that will be a key factor, because as such your broadcasting industry worldwide has seen lot of competition. You can say the trend of move towards the OTT is not only sustaining but it is accelerating as the time is going by. So I think the move is positive. One can hold on to the stock, but a lot depends upon how the company is able to, you can say, play around with the changed competitive dynamics, whether it is in the OTT space or some of the other segments.
All right, we take that point entirely. 2,400 crore worth cash on their books. Promoters' stake increases from 4% to 18%. And how quickly the night changes. You were talking about them looking at acquisitions just about a year ago. They were looking at being acquired themselves itself. So it'll be a very interesting space to watch. They've also rebranded their entire outlook for the company, etc., the channel, etc., and the programming. But I'd like your thoughts on Asian Paints because a lot has been said about competition, a lot has been said about valuation, a lot has been said about derating, but now Reliance, which held about 5% equity in the company, has gone ahead and sold it. So a massive chunk of liquidity the liquidity event is out. Do you think it is looking attractive at these levels with a decline of almost 33% from its high and a long spate of underperformance?
Fundamentals don't change. Okay. And if you look on the, I would say, technical side, the very fact that someone was holding the shares on the last, I think, say 20 years, now they have come and sold the shares. Now it clearly shows that they are also aware of the competition. They are also aware of how the growth is likely to be. I agree that the stock has corrected from, say, around, say, 30-35% from the peak. That is one factor. So can it further take a cut of another 30-35% from here? Looks unlikely at the present juncture. But is the situation right for, you can say, the stock to rally from here or any big turnaround happening in performance? I don't think so, because it's only 1 year, the competition is rising, more and more players are coming in, and unless and until there is significant increase happening in the growth rates of the industry, I don't think you can say the dynamics is going to change so fast. And yes, even after reaction, because last year there was a very sharp decline in profitability, the stock isn't cheap. And with the crude prices now volatile, and they have actually, if you look from the bottom, they are rallied by around, say, 50-odd%. So I would say tend to avoid, you can say, entering into the paint stock at this point of time.
Amnish, June has seen an impact on agri. Would that worry you about rural recovery? Your call on the FMCG stocks on this?
You see, first of all, I won't be much bothered about agri at this point of time, because until, you can say, last week, the sowing was up by 12% on a YOY basis, because we had, you can say, this time pre-monsoon, or the monsoon arrived early. So the sowing so far has been good. And what actually happens is that over the next, I think from you can say middle of June towards the end of August, these are the most critical 2.5 months of monsoons. So as of now, if you go by the IMD data till yesterday, there's a 25%, 24% kind of a deficient. With half of the meteorological subdivisions, they are having deficient rainfall. But I think it is too early to say that there is going to be a negative impact on agriculture or rural income per se. Now, coming to FMCG, you see there are two angles to it. One is the input cost for various FMCG products. If the monsoons pan out well, so that would remain a little benign. And the second is on the rural demand. You see, if you look at say particularly last few quarters, rural demand as such has been pretty good. It is running ahead of urban demand, and I think there's a probability that the rural demand will stay put the way it is. So I think as far as the FMCG sector is concerned, or any, I would say, the worries on the monsoon, I think it is too early to call that out. And in terms of FMCG demand also, if the things pan out well, there might be, you can say, incremental acceleration which can come in the rural India.
Amnish, I wanted to ask you about the biggest casualty yesterday. Everyone was talking about the big recovery that we saw in the markets, but Tata Motors, the street didn't like the commentary that's coming out with regard to the takeaways from the the investment meet, and that's why that stock was down close to around 4%. What's your view on the name? The name that was more than 1,000 rupees pulled back to sub, I think, closer to around 600 rupees, and then in fact now after moving to around 700 rupees odd, it was under pressure yesterday.
Okay, Nigel, actually, Tata Motor is facing multiple headwinds from the last few quarters. For example, you look at, say, domestic, the PV, particularly on the EV side, the growth rate is not there the way Tata Motors grew in the last two to 3 years. So that is not happening from the past, I think, at least 2 to 3 quarters. Even on the CV side, I think the numbers have been pretty muted. But more importantly, what is also, I think, troublesome for the company is what is happening on the JLR front. So there, I think you can say there's a lot of volatility because of these tariff wars are there sometimes. And now they are talking about, you can say, lower cash flows. So I think all these factors have resulted in the cut in the stock price. And I think in the near to medium term, with the kind of, you can say, global geopolitical situation, tariff wars, and you can say lot of uncertainty around, I think the stock can remain range bound with an upward bias because lot of negatives are already priced in. But having said that, at the same time, there is very limited visibility of any significant revival in growth.